So the results are in. 15 of 19 banks passed the stress test, but the news came 2 days early. Stephanie, why was the news released early?
Well, I think the news was released early because JP Morgan dictated the whole thing, which was really interesting. Not really surprising if you kind of read through the tea leaves and Jamie Dimon and his style, but it was good news they had to tell, right? And they were anxious to get out and tell the good word. So. I think overall the results were about as expected. Maybe a little bit better at JP, a little bit better at US Bancorp, a little bit better at Wells Fargo. But by the bottom line, I think, is that now we can focus on underlying fundamentals and away from regulation. Regulation is not gone, but this was a big one to get through. So I think it's a nice relief here.
So a big weight has been lifted off of the group.
Yes.
And it's time to take a look at the banking sector again, potentially?
Yeah, well, over the last couple of weeks, we have gone from an underweight to an overweight in the group. Because the U.S. economy has gotten better. I mean, it's been very clear, right? I mean, across the board, jobs, housing, manufacturing, retail sales, et cetera. And I think that overall bodes very well for the bank sector and for loan growth. I mean, that's the thing we've been waiting for, right? Forever. And now these banks are very well capitalized. And they have this kind of tailwind from the U.S. economy. And they're really, most of them are, the ones we like anyway, are U.S.-centric. So you don't have to worry about the growth slowing down in the global markets.
So JP Morgan was the first one out with the news. Were you happy with the share repurchase and the dividend increase?
Yeah, I mean, I think what's going to happen is, in general, and what you've seen is a little bit more aggressive buybacks and a little bit more conservative on dividends. And I think that makes sense, given that these companies can control when they buy back their stock, right, to some degree, and versus dividends. And I think that they'll kind of have to, we'll slowly inch them higher. But I think the combination makes a lot of sense. And yes, we were pleasantly surprised with the JP Morgan news.
On the other end, SunTrust didn't pass the test, but you're buying the stock today.
Yeah, and the stock is up 3%. Go figure. No, I think what really happened was that first, expectations were quite low. It started last week that people expected that they wouldn't pass. That was the rumor. So the stock really lagged the group. But secondly, most importantly, they were very close. Their cap ratios under the stress test will be 4.88% for Tier 1 common. 5 is the threshold. But more importantly than that is that if you look at their earnings, they have been under earning for the last year and a half. They paid their TARP back late. So I think that the Fed was looking at a very depressed earnings for the company, and as a result made the conclusions that they did. I think overall the company's in a great spot in cost cutting in a wonderful geographic location and region where there's real growth. And I think that you have a new CEO who's really determined to turn this company around. By the way, they raised guidance today for the first quarter. I'll take that too.
Yeah, not too bad.
Right.
Do you think when they resubmit their capital plans that it will be approved by the?
I think it could, but I think more importantly to me is I want to know why the first quarter earnings are going to be better than expected. Obviously we didn't get a lot of detail, but if it's that they're doing a better job on their cost restructuring program, people get really excited about that because I think they're going to upside surprise on costs. And slowly but surely you get better demand. So that's a really good model, I think, going forward.
And just last and quickly, what do you do with Citigroup and MetLife, who didn't pass the test?
Yeah, Citigroup, I'm just not a fan of that story, of that management. I just think, why go there when you have JP Morgan that's lagged the group year to date? And, in terms of MetLife, I don't think they're nearly as well capitalized as, say, a Prudential. So Prudential starts to fall, that's the one I would buy, but it probably has to fall to the mid-50s for us to get aggressive.
This market is fueled
Stock
by
pickers market.
Stocks have rallied this year.
We're coming into a Monday where